In this video, I'm going to give you one of the most easiest but also consistent successful strategies out there to pass prop firm challenges and scale funded accounts. It's a strategy that me and my students been using for a while now and still are using to scale funded accounts, pass prop firm challenges as well.
Nice.
And what I'm going to do now is I'm going to give you a step-by-step blueprint to how to use it. The strategy I'm talking about is based on the framework by ICT, short for Inner Circle Trader, and he came up with a framework called the Silver Bullet. What he gave us there is a framework, and from that framework you of course can build your own strategy of it. So we created a strategy that we have back tested for thousands of hours, and we have traded so successfully, got certified as funded traders several times over from different prop firms, and has gotten payout from different prop firms as well thanks to this strategy. And as the infamous ICT said himself, with this strategy you can quit your day job.
What?
Now I'm not saying to you quit your day job, absolutely not. Continue your day job until you see that consistent profit and until you have built an account and a capital enough to sustain you for at least a year. But still though, this strategy has the potential to perform miracles in your trading career if performed and executed exactly as explained. So discipline and patience is definitely needed. I can show you the way, but you need to walk the way yourself. My name is Jeremy Tekle, a multi-six-figure, soon-to-be seven-figure funded trader. For years, I have searched for a duplicatable strategy that I can actually teach my students that they easily can adapt to and do as well to be profitable on a consistent basis. I think I finally found it. This is it. So first and foremost, to understand the Silver Bullet strategy, you got to understand what a fair value gap is. Then I recommend you to watch the video on fair value gaps that is linked in the screen above. Next thing you need to understand when trading Silver Bullet strategy is market structure shift. To put it very basic, is of course when the market structure shifts. So if you have a bullish market structure, when a lower low is created and breaks the previous higher low, then we have a market structure shift. And now the market is trending downwards, bearish. If you don't know what market structure and market structure shift is, then I recommend you to watch the video on it, linked in the screen above. Okay, so we understand that we need a fair value gap and we need market structure to be able to enter the markets. Now we need rules to the game. What are we trading? We are trading London session 9 till 10 a.m. CET and NY session 4 till 5 p.m. CET. The time frames we trade on are 5 minute, 3 minute, and 1 minute time frame. Currency pairs we're trading are Euro USD, GBP USD, NAS 100, also known as Nasdaq, US 30, also known as Dow Jones, and SPX 500, also known as S&P 500 or Standard & Poor's 500. So, what are the rules to the game? The rules to the game are market structure shift must occur. Market structure shift can be before Silver Bullet hour. Market structure shift must be created by a fair value gap. So there must be a fair value gap that breaks the market or that is just before the market structure shift. Entry must be inside Silver Bullet hour. We are entering from the fair value gap and we enter 1 pip before the fair value gap starts. We put our stop loss 1 pip below or above the first candle in the fair value gap. So we're always looking at the first candle in the fair value gap and we are entering 1 pip below or above that one. If it's a buy order, then it's below the first candle in the fair value gap. If it's a sell order, then it's 1 pip above the first candle in the fair value gap. Our profit target is mechanically always 1 to 2 risk to reward. Exit profit targets, take profits, can be after Silver Bullet hour. So we of course always enter during the Silver Bullet hour, but if the trade runs and hasn't closed before the Silver Bullet hour is finished, then you can let it go until the next Silver Bullet hour starts. Then you want to close it. No trading during news. So the Silver Bullet rules do not apply during news. All right, so let's look on a real chart to see how this translates in the real markets. We are on GBP USD and we're looking at the 3 minute time frame. We are starting from the 8th of January 2024. And the first thing we need to see, of course, is a change in character. So in this situation here, what do we have? We have a low that created this high. We have this low. So we already have a change in character actually, just before the market open. So let's see if this holds. Boom. Okay. So what has happened is this. We have a new change in character. And it's good because this one did not leave any fair value gaps for us to enter from. All right. We needed a fair value gap to enter from, if you remember. We did not get any with this market structure shift right here. But if we zoom in a little bit, then you will see that this low created this high, market structure shift, and then came up, created this high, and shifted the market downwards again. So we are downtrending again. That market structure shift, the most recent market structure shift that occurred, left this fair value gap behind it. So here we have a perfect silver bullet scenario. We're entering 1 pip below the fair value gap, and we're putting our stop loss 1 pip above the first candle in the fair value gap. This is the first candle. This is the imbalance candle. This is the first candle. This is the third candle. All right. And this is the fair value gap in between. We're putting our take profit 2-to-1 risk to reward. Let's see if this holds. Boom. Profit taken. So that's 1 out of 1 so far. Let's move on and see what the New York session brings to us. So here we are at the New York session. We need a change in character down here. We need to take this low for a solid change in character. Market structure shift. Did not happen. Market ran away. No trade during New York session. Let's go to the next day, Tuesday, 9th of January, London session. All right, so as you see here, we had a low, high, change in character, upwards, uptrending, and then a market structure shift downwards. So this is the most recent market structure shift that you see right here. Took these lows, took the low that created this high, and therefore we're looking at the most recent fair value gap. We have one right here. Boom. So this is our entry, 1 pip below the fair value gap, 1 pip above the first candle in the fair value gap. First candle, imbalance candle, third candle. All right. Risk to reward 1 to 2. And now we're letting the trade run and see what happens. We have successfully entered the market. And this one is dragging out. And this is what I mean. We have an entry in the silver bullet hour as supposed to, but the trade is running outside of the silver bullet hour. And that is no problem. And we took profit. 2 out of 2 so far. Perfect. Let's look at another one. Going to the hourly time frame to fast forward a little bit. 3 minutes. We're in the New York session, and New York session starting. What do we have here? We have equal lows, changing character. We need to take this high, basically, these 2 highs for a changing character. No, did not happen. Market ran, no trade. Now we have Wednesday, the 10th of January, London session again. Market's trending downwards. And here we have a character shift or market structure shift. When I'm saying these two things, I'm talking about the same thing. This market structure shift occurs, pullback, and then we have a fair value gap right here. So here's our trade. And this time it's a buy situation. So bullish trade, and the fair value gap is on 1.2703. So I'll put this entry on 1.2704. Stop loss, 1 pip underneath the first candle in the fair value gap. Boom. So, and risk to reward, a nice 2-to-1 win to loss ratio, almost 16 pips. Let's see if we get an entry first and foremost. Yep, there's the entry. And we have a beautiful take profit. And now we are at 3 out of 3. So we have taken 3 wins out of 3 trades. We're moving on. New York session. Choppy market, as you see, changing character upwards, then downwards. So right now we are bearish but no fair value gap so far. Nothing so far. All right, and now we shifted character again. So here we shifted downwards. Now we have shifted upwards again. Okay, we are bullish. And the most recent fair value gap that we have here is this one that created the market structure shift. 1 pip above, we have our entry, and 1 pip below the first candle in the fair value gap is our entry. All right, 1 to 2 risk to reward, nice and neat. Let's see if we can find, if we get an entry on this one. Oh, there's the entry. And it took us out, stop loss hit. So we have 4 trades, 3 wins, 1 loss. Here we have Thursday. Going back to the 3-minute time frame. Right now we need to take this high right here to have a market structure shift. Let's see if that happens. Went downwards. No trade. Moving on to the New York session. Let's see. We need this high to be taken for market structure shift. No trade. And last day of the week, let's look at Friday. London session is Friday the 12th of January. We need bullish market structure shift. So we need this top to be taken, which it did here. Why is that? We had a bullish sequence here. The market shifted downwards, but the fair value gap came before the silver bullet hour. So it didn't count. Now we have another market structure shift upwards. Let's see if it creates a fair value gap. It does so. Perfect. Boom. That is our entry. 1 pip above. 1 pip below the first candle. This is the first candle of the fair value gap. Take profit. A beautiful, nice and neat 2 to 1 risk to reward. Let's see how this plays out. And we have another stop loss. Now we have 5 trades, 3 wins, 2 losses. And our last trade of the day is New York session. Let's see if we can finish this backtesting session with a nice little win. High, low, higher high. We need this to break. No, it doesn't. So there's no trade here. All right, so we're finishing this backtesting session with 3 wins and 2 losses. So that's about a 60% win to loss ratio. Backtesting the strategy about 1,000 trades, it has a win to loss ratio on about 62%. So this is very accurate. All wins are twice as big as the losses, which means that for every win we make, we can afford 2 losses. So with a 62% win to loss ratio, we are quite good in profit. There will be more backtesting videos on this one out soon. I will backtest more pairs on it and break down the stats, the win to loss ratios and everything. But with that said, remember to always have a proper risk management. No strategy matters if you don't have a proper risk management. So stick to your proper risk management, stick to your trading strategy, stick to your trading plan, do what you're supposed to, and you will scale your account nicely and profitably. And I will see you guys at the top because the bottom is way too crowded.